Welcome, everyone. Today's journey takes us to the heart of modern finance, where trust meets technology, through the lens of fraud prevention and forensic accounting. I'll be guiding you through vital tools and real-world insights that protect businesses in today's digital world. If you're interested in connecting or learning more, feel free to check out my LinkedIn profile. Let's dive right in with today's agenda. Here's what we'll cover in this session. We'll start with an introduction to why fraud prevention and forensic accounting matter more than ever. Next, we explore the emerging role of cybersecurity in accounting. We'll learn how to recognize signals of fraud, review real-world cases, and break down detection techniques and tools. I'll offer practical advice and finish with a Q&A and a quick conclusion. Now, let's begin with understanding the critical importance of this field. Fraud prevention and forensic accounting are truly the unsung heroes in protecting organizations today. As businesses embrace digital transformation, we see the risks of unauthorized transactions, data breaches, and record manipulation grow. To defend their assets and reputations, companies must adopt strong fraud detection and cybersecurity protocols. Forensic accountants are not just financial detectives. They ensure compliance, dig into suspicious activity, and empower teams with practical education. Collaboration and vigilance build resilience, integrity, and trust. By upholding meticulous standards, forensic accounting not only safeguards finances, but also strengthens long-term business stability. What does this look like in action? Let's explore the pillars supporting modern fraud prevention. Modern fraud prevention is built on three foundation stones: recognizing fraud signals, analyzing those signals, and maintaining robust cybersecurity. First, recognizing fraud signals means watching for warning signs, like odd transactions, duplicate payments, or sudden adjustments. Spotting these early lets organizations act fast and limit losses. Second, signal analysis is driven by technology. Forensic accountants use advanced analytics and pattern recognition tools to review records in real time. Automated alerts help pinpoint anything out of the ordinary so that quick investigations can start. Third, cybersecurity keeps everything safe from outside threats. Digital accounting systems face constant danger from phishing, ransomware, and data breaches. Companies must combine measures like multi-factor authentication, encryption, and staff training for strong defense. As we can see, cybersecurity is essential. Let's look closer at defending accounts from digital threats. As cyber threats evolve, so must our defenses. Accounting teams need to embrace best practices to keep data safe in an unpredictable environment. Key actions include using multi-factor access, so only approved users can log into sensitive systems, making life hard for fraudsters. Encrypting data, both stored and in transit, to prevent attackers from reading or altering critical information. Prioritizing employee training. Raising awareness against phishing, manipulation, and scams means your staff can act as vigilant gatekeepers. And finally, deploying continuous auditing tools. These tools track every user's activities and transactions, so even small anomalies trigger immediate reviews, stopping threats before they become problems. But what warnings should we be watching for? Let's discuss the categories of fraud signals. Fraud signals come in several forms: financial inconsistencies, abnormal behavior, and procedural deviations. Financial signals can be things like unexplained account changes or transactions rounded to suspiciously even numbers. Procedural signs might involve missing approval signatures or duplicate invoices, suggesting controls are being bypassed. Behavioral signs could show as sudden spikes in expenses or strange vendor payments. By interpreting these clues holistically, and not in isolation, auditors can catch problems early and prevent further damage. To see how this works in practice, let's look at some real cases. Case studies offer powerful lessons. Let's highlight 3 examples where forensic accountants made a real difference. First, an invoice manipulation case. A manufacturing company found altered invoices tied to vendor kickbacks. Forensic analysis linked suspicious entries to illicit deals, resulting in successful prosecution. Second, a payroll fraud case. At a retail chain, new auditing software flagged duplicate payroll deposits. An internal probe revealed Ghost employees on the payroll, a scheme uncovered through interviews and analytics. Third, expense report tampering. Corporate travel costs soared at a services company. Accountants discovered abnormally high claims for short trips, confirming fraud by cross-checking receipts and supplier data. What makes these successes possible? Let's discover the detection techniques and tools that empower forensic teams. Software innovation accelerates both the speed and accuracy of fraud detection. Continuous oversight means using real-time monitoring tools that integrate with accounting systems. These alert auditors instantly to red flags as they happen, supporting proactive fraud prevention. Workflow automation ramps up efficiency by making sure only legitimate entries are approved. Rule-based automation narrows risk windows and frees up specialists for deeper analysis. Then there's data analytics. Advanced platforms scan immense volumes of transactions, using artificial intelligence to spot patterns and flag potential fraud before losses get out of control. In short, combining innovative analytics with human expertise allows organizations to stay one step ahead. Let's tie these insights together by examining the bigger picture, using a SWOT analysis. A SWOT analysis helps us pinpoint where forensic accounting shines and where there's room for growth. Strengths include a deep understanding of digital fraud, along with robust IT controls and protocols that set a strong foundation. Weaknesses might be a dependence on specialized skills and the ongoing challenge of proactively spotting new suspicious patterns. Opportunities abound as accounting integrates more AI and automation, and as cybersecurity and finance teams work ever more closely. Threats remain, such as ever-changing tactics by cybercriminals and skill gaps in staff training. Recognizing these factors ensures forensic accounting evolves and remains a cornerstone of business security. To bring everything home, let's wrap up with a final thought. The key takeaway? Proactive detection isn't just important. It's essential. In a world where threats evolve at lightning speed, waiting for fraud to surface is no longer an option. By investing in robust training, leveraging advanced software, and fostering a culture of vigilance, companies can protect not just their assets, but also their future. Thank you for joining me today. If you'd like to connect or have questions, don't hesitate to reach out.